You are still with Market Midday right here on BTVI. Let's focus on the commodities space right now. BTVI had a conversation with Mrugank Paranjape, who's the Managing Director and CEO at MCX India. He basically elaborated on the exchange's expansion plans going forward, as well as what he perceives of growth in commodities trading, and also assured investors of delivering a 15% revenue growth for the next 5 years. Listen to this conversation.
For an economy which is growing at about 7-8%, 8 to 10% generic growth of volumes is something which we feel is absolutely sustainable. And for a market like India, where we are seeing a slew of reforms which is enhancing distribution, whether it is through bank distributors or the combination of entities or new products, or even through enhanced participation and new hedgers coming in, I think that number really goes up. So I think we believe and we remain confident of the sort of number of a 15% CAGR on our top line over the next 3 to 5 years, and that's something which we absolutely remain confident about.
Sure, sir. So secondly, I would also want to understand that you've recently expanded the gold contracts. So which are the exact geographies that you have tapped into?
So I think, when the GST was introduced and there was this expectation of one nation, one tax, we thought it's also the right time for us to come up with something which gets further, which is one nation, one tax and one price, along with a national level delivery. So clearly for a metal which is so dear to all of us in India and which is so widely used, we believe the right opportunity was to expand the delivery centers. In terms of consumption, our main delivery center and our primary delivery center continues to be in Ahmedabad, but we've enhanced that with one more in the west in Mumbai. We'll add Delhi and Kolkata, and then add a significant chunk from the southern states with Kochi and Chennai coming in. So our belief is that really this broad bases the entire delivery spectrum and makes this a truly national contract now in terms of delivery as well.
Absolutely, sir. So looking at the current scenario as far as the oil prices are concerned, in that case, what's the sort of demand that you're seeing for crude options going ahead?
So I think the crude options contract is a very good example of how the market takes up a product, on its own, and you don't really need to do anything too much in terms of, or artificial, so as I would say. So we are making all our efforts to educate the market about options, but we don't need to do anything which is artificial in terms of really getting the adoption done. As and when the crude prices demonstrate a volatility, I think participants just lap up this product. And I think that's the inherent strength of the network and the distribution and the efforts that we put into that when there is volatility and people need an instrument to hedge themselves or make use of that volatility to trade, people find the right mix of whether it's the options or the futures contract. We've seen that very effectively in crude. Just last couple of days, there was a lot of volatility which came about because of the views in the international markets about a stronger winter, and that fueled some of the prices in the energy contracts, and we saw an immediate impact from the options side as well. So that's something which is a healthy trend, and we believe this will really expand the market for us.
Correct. So this was about the crude options, but what about the other segments? How is the growth picking up there?
So I think it's been very good in terms of what we are seeing in the gold product. We would have been happier with what we see in the other products. I would admit that we would like to see a better pickup on the options contract in, say, a copper or a zinc, but that's something where we need to do a little bit more to get market to adapt to that product.
If you could also understand that LME also has tie-ups with other exchanges as well. So how is this going to be different from the others?
So just maybe it's something which we haven't clarified enough. We have a tie-up with LME for 5 base metals, and 4 of which are traded with us, and we also have it for tin, which is still not traded. But for all these 5 metals, we have exclusive contract for the Indian domestic market. I keep saying Indian domestic market because with the launch of the Gift City initiative, which is a great initiative happening in India, but that's not a domestic market. That's really the international market in India, and we as MCX have not gone to that market at all. So yes, LME does have tie-ups with other exchanges and would have tie-ups with other exchanges in Gift City, but from an Indian domestic perspective, for the 5 contracts that are there, we have absolute exclusivity with LME.
Correct. One last quick question, sir, before we let you go. As far as the revenue and growth is concerned, how do you view that going ahead in FY19, and how specifically do you look at India as far as the commodity market is concerned?
So I think at MCX, and to a question which a lot of people have asked us, on the advent of universal exchange, etc., we believe we are a universal commodity exchange, and that's because we are absolutely bullish on the commodity market. We believe it is the one segment which has the best growth opportunities. Maybe that's why other exchanges are looking at this segment, and therefore we remain fairly confident that what we have promised our investors as a long-term view of a 15% growth in terms of revenue growth in terms of a 4-year CAGR, it's an absolutely achievable number. It's absolutely achievable continuing with the cost controls that we've demonstrated at MCX, and that's really the growth we're seeing in our company.
All right, so they really are betting quite large on the growth of commodities as well as how things are going to be panning out. And of course, that 15% revenue growth very much in that conversation. Sit ahead, we're getting you another chat, and this is going to be with the market guru Prashant Jain, the Chief Investment Officer at HDFC AMC, on the particular outlook they have on markets as well as investing going forward. Wait up for that. We're coming right back in just a few moments.